If you want to outperform the market or have a great performance with your portfolio, there are a few mistakes that you absolutely need to avoid. Before, when I started investing, I was not outperforming the market because I was doing those mistakes. Since I changed things in my portfolio 2 years ago, now I'm able to outperform the market consistently, and I think that in the long run, it will help me. All those mistakes, I got them by my experience, but also from experience to great investors that I read books, that I follow, and that I listen. So let's get into those mistakes because I'm sure they will help you to have at least a better performance if you implement them right after this video. The first mistake that I see a lot is not checking the history of a company long enough, okay? Especially how it went during a big crisis. We had last 10, almost 15 years, amazing for business, okay? Like it's probably one of the greatest moments in history. Maybe the 90s was a bit like this, but where everything was going up. If you started invested after 2009, you have very little chance that you will not earn money and earn a lot of money, okay? Because the market went up 12% per year and everything was great. The economic factor was so good for businesses. And people start to tend to think that it's normal. It's normal that everything is like this and it will continue like this. But no, there is some big crisis that can come ahead. I'm not saying there will be one. I don't want to enter into all the speculation, but we need to remember this. And the best way to remember this and taking it into consideration is to look at how companies have endured crises like 2008, like 2000. Unfortunately, most of the website to analyze blocked when it's on 10 years, okay? You pay the first plan, you will have 10 years of data. Most of them, if you want to have 20, 30 years, 40 years, it starts to be very, very expensive. That's a problem, but you can still have access to all of this on the website of company, on the 10K and so on. And I really recommend you to look at how the company behaved during, for example, 2008 crisis, okay, during this depression. Look how it behaved and also look how the management behaved. What did they do during this time? Did they change something? Did they lose a lot of revenue? Did they lose a lot of margin? You want to look at this because you will be more prepared if a new crisis like this arrives, and it will help you to continue to outperform. You may also take more margin of safety. For example, like a company like S&P Global. When you have a big crisis, this company is likely to reduce their revenue, okay, to reduce their income. It's obviously a great company, but it's the kind of company that you don't want to pay too much of a premium when everything is good, because you can have at a real discount when technically everything is bad on the market. So this is what I'm meaning here. Really look at the history. Go back in time and look how it performed during those moments. The second mistake is having too many companies in your portfolio, especially if you have over 20. If you have over 20 and you want to outperform, it's way too much, okay? It's way too much. Eventually, if it's because you have a quality factor ETF or something like this, so it's you have more than 20, maybe why not? You could outperform on the long run, but generally, if you are a stock picker with more than 20 companies, it's too much because you cannot follow them. Okay, you cannot follow the earning call. You cannot take the right decision at the right time when you have too much company to follow. So I think you need to have less than 20 and probably having like 4 or 5 big conviction in your portfolio. Big conviction is something around 10% of your portfolio, which will be in 5 companies. Okay, like 10% each company. Because if you don't have any conviction and you just place like this because you think it's fair value and so on, it can be problematic. Mistake number 3, it's waiting because it will go down more, okay? A lot of people say, okay, like now everything is a mess, the market will go down more, so I'm not investing now, it's stupid to invest now, I'm waiting it go down more because it will go down more. We don't know this, okay? We have no idea of this, and what you should do instead is as soon as a company has the fair value based on your predictions, based on your thesis, you need to invest. Don't wait that it will go down more, like what, 10%? Seriously, like you're really going to wait for 10% decrease more to buy, like you're really at 10% for your whole investment, especially if you invest on long term. Like, can you imagine, I don't know, you go to the market with your son, he want to buy, I don't know, a toy, okay? You're okay to buy him this toy. You realize this toy is $20 and you say, I know my budget was $18, so I cannot go over $18. Like you will, because of 10%, you will not buy. Like you will not behave like this. So with company, don't do the same, okay? Do like, if it's around 10% of your value, just buy, okay? Don't wait that it will go down more, especially if you're really convinced by this company. If you don't really know and so on, okay, take this time to analyze more. But if you know it's a fair value, you're very close to the fair value, just invest, okay? Especially like on the long run. If you invest for 1 year, yeah, don't do this, especially like generally people who invest for 1 year don't outperform. But if you invest for the long run and you're aiming for compounders, you don't care about 10% more or less, okay? Mistake number 4, and this one is mostly for beginners, okay? I see a lot of beginners that trust the wrong data. Sometimes I have people telling me, oh yeah, I love this company. The company have great margin, way above market and so on. And I look at the company's margin, it's like operating margin 5%, return on capital invested 5%. And I'm like, where did you get your data? Like, how come you said it was great over 20% and so on? And when I look, it's only this. Where do you get your data? And a lot of people make the mistakes that they don't trust, like they trust the wrong data. Like they think that they saw something somewhere. It's true because they saw somebody on the Twitter saying about it, or they saw a YouTuber saying this, or they saw something in a comment section on a forum, or a friend, or the TV, I don't know. But a lot of time people are mistaken with the data. And this is very dangerous because of this, you will invest for the wrong reason. And this is dangerous, to invest for the wrong reason, to invest in a company that you think have great margins, and finally, they absolutely don't. Donc really, be careful about data. Mistake number 5 is to focus too much on numbers and not enough on customers. And I will even add focus too much on value. Focus too much on numbers is like, there is companies that, there are some company which great numbers, okay? You look at the balance sheet, the income statement, great, steady growth, very, very nice company. You really like to see it, okay? You have low debt, high return on capital, high margins, good growth, okay, same above the market growth. So you're like, okay, it cannot go wrong. Now it's super undervalued. It cannot go wrong. I invest. But the thing is, you don't look at the customer point of view. You don't understand what the company is doing. You don't know who are the customer. And sometimes when you deep into this, you realize that all the customers, they are using this because they don't have choice. But as soon as there is a new solution on the market, which will be better, they will go on. So you think they have an advantage because there is no solution on the market. But as soon as something arrives, they will go. And this is a big problem. I mean, maybe it's a big problem for my philosophy of investment, I don't know, but I like to invest in company where customers are happy to use them. Not because they are forced, but because they are happy. Because when they are forced, as soon as they have an opportunity to leave, they will. So try to not focus on this kind of company because, yeah, this is really problematic. The first one that I have in mind when I'm talking about this is, for example, PayPal. PayPal, I don't know a single person, a single business owner that is not pissed when he have to receive a payment from PayPal. I mean, obviously, we love receiving payment for PayPal. We prefer receiving from PayPal than nothing. But when you look at the fees you need to pay, when you have your money which is all for no reason, when you try to talk to customer support but they are just making you rounding for nothing, like this company is a real mess for customers. Maybe when you use PayPal to buy online, you feel safer and you're happy, maybe why not? But on the other hand, for a seller, even for a legit seller, okay, I would understand if you're not legit and you're scamming people, yeah, great. It's good that people are protected for this. But for legit sellers, all the problems that you have, all the fees that you have for literally no reason, like there is no reason to charge that much fees, this is problematic. And I don't like to invest in this kind of business. So yeah, maybe I'm talking a bit too much about PayPal on this channel, but you understand the thing that don't invest in company that don't have a good customer relation, that are not good with customers. And I will even put one more, is don't focus too much on valuation. Valuation is not everything. You want to invest in a great business, at a good price, not in normal or random business at a very discounted price. Okay, you want great business, good price. If you can have great business but very discounted price, okay, amazing. But generally, like, it's more important to have great business at good price than really random business at very low price. By the way, in the next few days, weeks, I will be launching my app, which is called Margin, where you can analyze your company. If you want to participate in the pre-launch, okay, you can join the waitlist with a link in the description. We'll launch new features regularly every week, every month, and we'll have a big discount and a big access for the first user because their feedback will be very important. So we'll be limiting the access for the 20 people, probably each month we'll add 20 more people to be sure that everything is working correctly and to take some feedback. So you can join the waitlist with the link in the description, and I will be happy to see you there. Bye.